growth of the PRI, particularly in Western Europe, but also in Australia and North America, is really driven by the leadership of the first group of signatories that we got signed up. When we launched, many of the world's most respected large pension schemes and fund managers signed up, and really it became a peer-to-peer issue or relationship, and also a client to investment manager relationship. And so from the initial group of about 50 organisations, it quickly spread. We've added around 200 signatories per year since then, and now have in excess of 1,200 signatories. Some people said or assumed that the financial crisis would hurt responsible investment because they saw responsible investment as a nice to have, which would get cut in times of austerity. Actually, what happened was the complete opposite. We had more signatories sign up post 2008 than we did before. And the reason is, I think, twofold. Number one, there was a loss of confidence in the traditional approaches, or certainly a recognition that what had been the dominant discourse was actually got it so wrong. The other point is that after the crisis, when money was scarce, the private equity firms were lining up at the doors of the clients. And then they suddenly realised, hey, these clients like CalPERS, CalSTRS, British Telecom Pension Scheme, PGGM, they are really committed to responsible investment. So we'd better get on this train also. I think pension funds recognise that as very long-term investors, they need to invest for the long term. What we've seen particularly in Northern Europe is many of the government-connected pension funds, or pension funds that manage money for government institutions, have really taken on board this as part of their license to operate. Many investment managers still maintain a paradigm from a bygone era, which says that the only thing that matters is a small number of financial metrics. The great bulk of financial value and embedded in the share price is intangible and wrapped up in loosely what you could call environmental, social, corporate governance, human capital, quality of management. I think the paradigms, old school paradigms of many investment managers is still very much an obstacle. But we're seeing that change. And many of the leading investment managers are starting to include global megatrends into their investment processes. One of the areas where I think leadership on the investor side and the corporate side can really make a difference is addressing short-termism. There are people trading shares, demanding quarterly earnings, improvements in quarterly earnings, incentivizing CEOs to deliver growth in quarterly earnings, which is actually impossible for most companies. That can only be addressed by the leaderships of pension funds, fund managers and corporations getting together and saying something is wrong. The people who would punish us in the market if we were to invest in something that returns a low return for a number of years based on the idea that it's a good long-term bet, that needs to be addressed. And I think that can only be addressed by the leadership of these organisations.